Hello, everybody. Dr. Rick here, dropping in on you. Hope everybody is having an unbelievable week. I hope that everything is moving along as planned, but even if not at this current moment, remember what I always say: if you're still breathing, you're still in the fight. Um, and always remember that it's never over until it's actually over. And if you're breathing, you're still in it. And you've got to keep pushing, you've got to keep working, you've got to keep applying yourself, you got to keep grabbing knowledge and making adjustments. If you invest in it, if you put into it, if you remain consistent, it is coming. Don't be fooled by the illusion of failure, the illusion of defeat. You're going to take some bumps and bruises. You're going to take some temporary losses. You're going to have some setbacks, but that is not the end of the story. Keep writing the narrative. Keep pushing. Keep fighting. Look, hey, uh, let me tell you, today is Wealth Building Wednesday. Um, I'm going to keep it very simple, but I hope that you get something out of it. Um, for those of you who are seriously looking for ways to connect with the right people um, and develop an understanding of how to build wealth over time, how to properly set the foundation and consistently move towards a goal to be in a position to pass down wealth and create the cycle of generational wealth, something that is very, very lacking in the Black community specifically. Uh, I encourage you to join Legacy Wealth, which is um, an organization and company I created to educate people on the basics of wealth building. And I say basics, but if you learn these basics, you build on that and you can do some unbelievable things. I've told some stories of people who had very uh, modest to be nice income, but found the right way to use what they had and created some pretty unbelievable results over time. And you're no different than that. There's a process. When you try to cheat the process, you get burnt. When you understand the process and you operate in the process, you produce results. You're no different than anyone else. You're starting at a different place. You're starting with a certain amount of resources and access. But if you've got $5, you got a chance to start. It's that simple. Now, is your journey going to be more challenging and you're going to have to be more creative and you're going to have to be more patient than the person that's starting with 5,000, 50,000, 500,000? Absolutely. But the thing is, you have to get started. You can't wait on some magical thing or some fortuitous situation in your life to come to say, I'm going to have enough. You have to create enough and you have to do it. And I've told you stories about people who didn't have it, but refused not to do it and went ahead, did it, and unbelievable things happened. James Crowley, Theodore Johnson, look them up. But anyway, the link to join Legacy Wealth, if you join Legacy Wealth, it's a lifetime membership. It's a 6-month course that you're going to take, but it's a lifetime membership and you're going to consistently be given content. I'm going to share things with you. There's nobody selling you anything. I'm not asking you to invest anything. You get in. This is a lifetime of learning. Plus, you're going to be invited into the mastermind group Epic Realm that I created to bring people who are like-minded, people who are elevating. You'll get a free lifetime membership into Epic Realm. This is a mastermind group where we not only fan your flames, we encourage you, we provide outlook, we provide insight, put your minds together and come up with things. It's absolutely no reason that you're sitting around trying to figure out all these things on your own when there are people who are thinking like you, desiring to do things like you. A lot of people in Epic Realm have already done it. They're former clients of mine, and they are doing some unbelievable things. And I brought them into one place so that we can bring people in and put them in an environment where they are expected to win, encouraged to win, and given the support to win. And all of this is a part of um, joining the Legacy Wealth program. But anyway, that's that. let's talk today the importance of asset allocation. If you talk to um, anybody that has had consistent success in investing over time, anyone who has generated a substantial amount of wealth by way of investing, you will find that there's a common theme. And I've shared some of those with you as far as asymmetric risk reward, cost management, tax awareness, low risk, and some other things. But diversity of investment or asset allocation is one of the most important skills that any investor will ever develop. The ability to know how to allocate their assets. That means distribute or disperse their resources into assets, across industries, across different things in order to, number one, hedge against loss, number two, increase potential for gain, and be able to manage and maneuver during volatility. Um, you're not going to find anyone who has been extremely successful without understanding the importance of being able to manage asset allocation, or how you're allocating your resources and where you're putting them. The diversity of it is so important. Diversity in when used correctly says, I am going to understand the industries or the companies or the commodities or assets or whatever it is that I'm investing in, to understand the potential for gain and the potential for loss. Anyone who has really been successful tell you that they actually pay more attention to what they stand to lose than what they stand to gain. The other part of it is asymmetric risk reward. What is that? That means I'm looking for opportunities to invest as little as I can and protect myself on the downside. What does that mean? That I'm going to put a little in to gain a lot, but I'm going to protect myself on the downside, meaning that if there's a way to guarantee a minimal loss, I want to take advantage of it. And there are opportunities to do that in different, situations and assets. Now, when most people think about investing, they're either thinking real estate or they're thinking the stock market. There's so many other ways to distribute and invest in assets. And what you want is your assets versus your bank to hold the predominance of your wealth. Most people, when they're, here's a prime example. Let's use Kanye West for example. He's a big talker. Everybody's talking about the fact that he lost his billionaire status because Adidas canceled his deal. And the deal was reportedly worth $1.5 billion. So he's now currently worth somewhere between 400 and 500 million after losing that deal. That is what is being reported. Obviously there may be some things that the people who are creating these reports may not know, but this is with what they can gather what's being said. So let's look at how that looks. He has money in real estate that I was able to confirm, because I wanted to kind of see how it was distributed. He's invested 5% into his wife's company, his ex-wife's company, Skims. So he has that. He has his catalog that he owns. And then he had the big deal with the Yeezy brand, and he has a deal that I'm pretty sure he doesn't have any longer with Old Navy. All this accumulated business in assets. I'm pretty sure there are a bunch of other small things he has going on, but it gave him a net worth of $1 billion. Now, what most people who don't understand wealth building think is when you say millionaire, billionaire, that means that's how much money they have in the bank. No, smart investors are not going to have a large cash flow sitting around. Why? Because there are not many banks that can produce a return greater than what you can produce by simply investing in a strong index like the S&P 500. Even though it's underperforming now, what it normally does is still outperforming any bank that you're going to put your money into. And it's a compounded growth. So it is still stronger than keeping your money in the bank. So when you look at the average wealth person who has developed wealth, they're not going to have a whole lot of cash laying around. Now, it may be a lot of cash in comparison to what the average person has, but if they're worth $1 billion, there's not $1 billion sitting in their bank account. It just doesn't make sense. And that's the last place anybody who understands currency, cash, and money will want their wealth. Why? Because the volatility of the dollar. I can have my money. If I've got $1 billion and I've got it all in cash in a bank, I could wake up tomorrow and I'll have 500 million. Why? Because all it takes is something to move on the value of the currency of the dollar, because that's what it's on, and it's nothing backing it. So I don't have anything backing it. No, what wealthy people invest in is art. Then they insure their art for more they invested. So they immediately increase their investment by insuring their investment for more than what they invested. Okay, that's art, that's jewelry, that's property, um, you know, auto collections and things of that nature. But where a lot of people don't realize a lot of wealth comes from, or a lot of wealth is actually hidden or concealed, is in businesses. There's a reason why I start businesses. There's a reason why I encourage people to start businesses. Why? A great deal of your net worth is going to be in the value of your business. Now, the valuation of your company can be simplified in most instances. You can take a business and look at the annual revenue generated by the business and multiply it times 5. And that's normally how you're going to get the value of the business, what the business is worth. And what the business is worth is a part of your net worth equation. Now, what's the net worth equation? The net worth equation is all of your assets that hold value minus the debt and financial commitments you have. Now, once you subtract that, you go from gross worth to net worth. Your net worth is, after all debts are subtracted, this is what I'm worth. Okay, so when you look at what Kanye was worth before the deal, that wasn't cash assets. That wasn't money he could just go out and spend. That was his net worth based on what that deal was going to produce over him over the time of the contract. And so what you have to understand is you want to invest in things. And here's the thing: if you have a solid business that is producing and has the foundation and structure to withstand economic volatility over time, then what you are going to see is that you will not only have some place to invest your own money, but what you will also have is a place to invest, for others to invest. And you will find that others will invest in you as well. And I've got a troll on here posting bull crap about dating, and I'm trying to block them, and now it won't even let me block them there. It's always something. But anyway, just ignore them. I wish I had some more administrators on here that could actually do something with them. But anyway, that's that. But anyway, so one way that you find with business that you can distribute or allocate funds and resources is into a business. You put it into a business. Not only will the business grow if you do it right, but it's a good way to hold assets and limit losses based off currency fluctuation, especially if the business has international value. In other words, if there's a way that even if the US dollar takes a hit, that your company has value in other markets, whether it be the euro, whether it be the yen, whether it be any of another any of the other currency entities out there, then you can definitely still holds strong value over volatile times. But you can invest in, like I said, real estate. You can invest in art. You can invest in so many things. You definitely can invest in the stock market, and you don't have to take major risks to invest in the stock market. There are some pretty strong. Nothing is guaranteed. There's nothing that you can get into that is guaranteed. There's nothing you can get into and you can say, okay, I can't lose. What you can do is get guarantees on your investment in certain instances. You can get guarantees on a certain percentage of your investment, or you can get guarantees very rarely, but you can get guarantees on the whole investment. Normally with those, you are going to get lower returns, but you're going to be limited in your risk. Now, again, that's still not 100% risk-free. Here's why. Anytime there's a guarantee on a return of principal, then that is with the understanding, the assumption that there will be funds at the time that a deal goes south to pay the guarantee. It is normally given in an instance where gains are almost certain, but never guaranteed. And so when someone says, I'm going to give you a guaranteed on return of principal, what it means is I'm so certain the deal is going to go through, I'm willing to put up the funds on the back end in case it doesn't go through. Now, what you're depending upon is that that person will have the funds at that time. And there's a possibility that that may not be the case, but it's still a better investment than going all in with nothing to protect you on the downside. You want to protect on the downside as much as you possibly can. Now, here is what I really want you to focus on this. The diversity is about this. If I put all my eggs in one basket and I say I'm investing everything here, here is the problem with that. The problem with that is that you are going to be in a situation where if something goes wrong in that industry, you lose everything. On the flip side, if I diversify, if I do my research, and I sit up and I have a good idea of how a company is going to perform, and I invest in that, and I do my research on the next one. Say I have 10 investments that I've done my research on, and that those investments are allocated based on asymmetric risk reward, meaning that I put a small amount in with a high upside. So I stand to gain way more than I stand to lose. Okay, now here's what happens. If I lose on 3 of those, I still win financially because I earned more money than I lost. That's diversification. That's hedging your investment so that something can't not catastrophically wipe you out if something goes wrong in one industry or even 2 industries. You are building a portfolio of diversity in different market across assets that says, I've done my homework and I stand to win more than I stand to lose, and I should be okay. Now, again, nothing is ever guaranteed, but what you're doing is you're increasing the possibility of winning by doing your homework, by understanding what's going on. And it takes time to know, to be a venture capitalist, to be able to invest in a business, you need to understand how businesses work. You need to understand, you need to be able to look at a business plan and be able to look at the structure of the business, how the business is laid out. You need to be able to look at the marketing plan and look at the projected burn rate. The burn rate is how much money this business is going to go through advertising, promoting products and services and all this before it reaches profit. That burn rate is going to tell you how much is being spent a month that isn't producing a return. You need to understand that. So what's the projected point of profit, or the projected date in which you go from being in the red into being in the black? And you need to be able to read those marketing analysis, understand markets, look at what the market looks like, look at market saturation, look at market positioning, look at the big players in the market. How much of the market do they already hold? What are the chances of this business being able to secure any of the business in the major markets? Or does this business have the ability to move into a specific niche area that has not been saturated, that has not been engaged fully, and is their target audience big enough to support the investment that you're putting into the business? If you're the business owner and you're putting your business plan together and your marketing analysis and research and all that together to present to an investor, you need to understand what that investor is going to be looking for. He's going to be looking for the viability of your company by a strong presentation and image of what's in that market, and how you're going to move in the market. What's your plan on securing a space in the market, what that looks like in 6 months, what it looks like in a year, what it looks like in 2 years, etc. And based on that, they'll make a decision. Just because you think something is going to work doesn't mean it is. Just because it sounds good doesn't mean that it's solid. What you need to be able to do is you need to be able to put the pen to the paper and make it make sense. Same thing with an investment. You've got to look at it and say, okay, over time, what has happened? The beautiful thing about the stock market is you got all these financials that you can look at. It's a publicly traded company, so their financials are public record. You can look at it. You can see what they do quarterly. You can see how they move. You can also go back far enough to see how they operate in times of turbulence, when the market is in crisis, when the market is in when there's a bear market and prices are being pushed or forced down. How do they respond? How well do they recover? How long does it take them to recover? These are all things you can look at and learn. Don't get so caught up in trends because something is hot. Because anything trendy is dependent upon the force and the momentum of the trend. If something shifts the momentum, if something changes the force, in other words, what you're looking at, the reason the price is going up is because so many people are buying it. Now, all it takes is a shift in the trend, a shift in the need, a shift in the situation, and that can change. And so you need to be aware of long term. I'm not real big, I've said this before, on active trading. Why? It'll get you rich quick, but it'll get you broke as quick. So look for the ways that you can stabilize your growth and move slowly. And don't panic when you experience a loss, because everybody does. Don't panic when you experience a loss. Just make sure that you do the best you can and to minimize your losses. And you will find that over time, you're going to have fewer losses, and they're going to be mitigated losses, but you're going to always have them. That's why you diversify. And anybody that tells you they can predict the market is lying to you. Warren Buffett will tell you that. Ray Dalio will tell you that. David Swenson will tell you that. All of these guys are major players. They're going to tell you that, that you can't predict the market. What you can do is be aware of different influences on the market, how the market may respond. You can sit up and say, well, at some point, this bubble is going to burst. And in some instances, like the housing bubble back in the 2000s that was created by subprime lending, oh, anybody with half a brain that knew anything about market values and everything knew that at a point, this thing is going to pop. And it's a bunch of people that hedged against that and won big. One guy turned 30 million into 2 billion by betting against that market. And so there are always ways to make money. And the more you learn, the more creative you get. And the thing is, you can move at your speed. You don't have to be at the speed of the guy that, has the answers because they've been doing it for 40 years. You move at the speed that you learn, and you invest as much time as you want to in learning. But the thing is, I encourage everybody, create an entity for yourself that you can invest in yourself with. To me, that's business. I can invest in myself. I can control the movement of it. I'm not just dependent on somebody else managing something well for me to win. It's up to me to manage it, and I'm always going to have something that works for me. And eventually, if you build it right, you can sit up and automate it or hire someone to come in and run it and still benefit from the income by setting up the structure to pay yourself. Also, you need to understand ways of protecting yourself tax-wise. Unincorporated business trusts, also known as Massachusetts trusts. Be very careful with them because the IRS can't stand them, but they're legitimate entities. You just have to make sure you're running them all right. And they actually have advantages that corporations don't have. Corporation still has double taxation. A unincorporated business trust does not. Learn all of these things over time by investing in yourself. All this stuff is being taught in Legacy Wealth, and it's for you to learn and to use. So if you're really serious about it, click the link and join. Um, a little less than $1,000 for a lifetime membership and a 6-month course. Also, if you're looking to start a business, this is a good place to start as well, because you're going to land in the Epic Realm community of high achievers, which is a mastermind group where we literally support you. It's a positive environment. The number one rule is positivity. No one's ideas are stupid. No one is going to be broken down, torn down, mishandled, mistreated. Everybody there is going to be encouraged to be their best self, and we're going to challenge you. We're going to take your ideas. We do Q&As on a regular basis. I've been kind of caught up in a lot of things going on in my life, but I'm jumped back into it. So it's going to be an exciting time as we close out the year. This is the best time to get it. You've heard me say this. Look, don't wait until January 1st to start some new idea of change. That's a transitional day. That's a transitional time in your life. You should be already in motion when you reach the transitional phase. You should already have momentum. You should have an idea of where you're going. Don't wait until that day. That's why so many New Year's resolutions fail. You're trying to change something in a day by making a statement, and you don't have the momentum built. What you want to do is get to that transition period. How you start something is normally how it's going to go. How you start the day, how you start the week, how you start the month, how you start the year is going to be very dependent upon how you go. It's amazing how that works, but it does. So I'm challenging you. Don't get caught standing still on January 1st, 2023. It's time to make some moves. I would love to be a part of your decision making. I would love to be a part of helping you. And again, nothing that you choose to do by what you learn here, I'm going to benefit from. I'm not asking you to invest in anything. I'm not asking you to buy anything. I'm not selling anything for commission. I'm saying for a one-time price, you become a member of something where you learn, where you take advantage of my course. I teach you all the principles that are out there that are not being taught, definitely not in school, not even in college. But if you sit down and you talk to the people who are making the money, they're talking about it. And the crazy thing that just really blows my mind is the people that I've approached, they're not hiding it. They're talking about it, but it's not being put in mainstream. It's not readily available. You got to go find it. It's out there. And the people who are on it don't mind talking about it. You can't shut them up once they start talking. The people who taught me, the first person who taught me approached me. And it's been going ever since. What I'm trying to tell you is you can get out there, you can do it. It's not magic. It's not going to happen overnight. There are no get rich quick schemes, and you will have rough spots. You're going to hit some points. I've had a couple of points where I got knocked flat on my back. Here's the thing though. Once you know, you never panic. Why? Because if I've done it once, what? I can do it again. And so you pick up, and what you'll learn is the average millionaire will lose what they've earned and created at least twice in their lifetime, simply because they're trying things and they're going out. Sometimes they get overzealous. But the thing is, they don't panic. Why? Because their wealth is actually here. Here's the most valuable thing you will ever have: your mind, your imagination, the ability to create solutions and opportunities that don't even exist right now. That's the biggest thing you have. So I encourage you. There are some things that are just really happening right now. I'm so excited about them. I'm keeping them to myself, except for the people in my immediate circle. But what I will tell you is something good can happen for you, but you have to contribute. It's not going to fall out of the sky. It's not going to be from happenstance. It's going to be from you investing in yourself: time, energy, effort, faith, hope, prayer, meditation, and yes, finance. On that note, I'm out of here. Like I always say, I live my life on full. The reason I do that is when I leave this place, I will die on E. What does that mean? That means that I will not leave any potential untapped. I will not take any potential to the grave. Now, I'm not going to the grave. I'm going to be cremated. But I am not taking anything out of this life that I was supposed to spend and invest and grow and do in this life. I wake up every day and I live my life on full because tomorrow isn't promised. And so what I'm saying, when I say I'm going to live my life on full so that I die on E, that's exactly what I mean. I'm not taking anything. I don't want to have to show up to the designer and say, hey, I didn't use this. I know you gave it to me, but I didn't use it. I know I was gifted, but I didn't do anything with it. I know I had an idea, but I never approached it. No, I'm going all out and I'm going to bless as many people as I possibly can in as many ways as I can. And I'm challenging you to up the challenge and standard in your life to challenge yourself. That's what I'm going to leave you with. You guys have an unbelievable day. I'm out of here.